Welcome back to another monthly update where I'm going to share with you all the dividends that I received as well as interest and cashback for the month of November. Without further ado, let's get started. So I'm going to be using GetQuinn, which is my portfolio tracker of choice. I've done a few videos around them. Really great platform. As you can see, it brings in all my various brokers and holdings that I have here in the active brokers, which is my main broker of choice, where I buy my stocks and dividends, but I also use Trading 212, Trade Republic. I still have Lightyear, but for now, that's the only broker that doesn't integrate with them automatically, where it auto-syncs, but I'm sure that will be added very soon. And then all my other Ethereum, Bitcoin, even cash balance is added there. You could also add your real estate, etc. So it's really up to you. Amazing platform, and I really like it. But anyhow, we want to talk about dividends, and that's why I'm going to stay on the aggregated portfolio, because that's really brings in all the various platforms. Because while the majority of my holdings is obviously on interactive brokers, I do have a fair bit of my own also on some other brokers. Let's focus on the dividends. We scroll down over here, and then you can see here the dividend section, and boom, you will see here all the numbers I got. And especially we want to focus obviously on last month, which is November. And then you can see here right away what I got for the month of November. Now, when you see across all the various months and the last few months, actually is one of the lower ones that I had. And that's just the reality with dividend investing, right? Because most of the companies pay you on a quarterly basis. One company pays me on a monthly basis. I do have two companies that pay me on an annual basis, but again, the majority on a quarterly basis. So you might always have one or the other quarter that is a little bit lower. When we look ahead, for example, for December, obviously it's going to be very nice. First time crossing the 3-figure monthly dividend income, which is nice. But November, unfortunately, a little bit lower, which is totally fine. Some of them are paying on an annual basis. So there's really no point to just look at 1 month, but really on an annual basis. Let's focus on November. What was my income over there? Right. So the first one is Starbucks. And that's actually not a stock that I bought myself, but it was one of the few referral stocks that I got in one of the other brokers, I believe in Trading 212. And if you signed up to any of those platforms, both you and I will benefit from it and most likely get a free share, which is always nice. Even though in the long term, I always try to sell those companies that I'm not really interested in and then switch them into companies that I want to hold in my portfolio. But that was one of the companies that I haven't switched yet. So I got a tiny dividend of, what is that, 4 cents or something. So it doesn't really matter in the grand scheme of things. Then I have Apple. As you can see here, in this case, it's listed twice. And that's because, once again, is the fact that right now we're looking at my aggregate portfolio, but actually I have it in interactive brokers and I believe also in Trading 212. So it brings it together. In general, I can see in my holdings, I only have one position and I look at the stock portfolio, but in terms of dividend income, I obviously got it paid in 2 different brokers. So I quite like that they do list it separately. Over there, you can see here, I mean, still a small holding because Apple dividend is actually really small, less than 0.7% annual dividend, I believe. It's really not a dividend stock as such, but more a tech growth stock. That's why I like Apple and I keep on holding it. But yeah, for dividends, it's not really contributing much to my portfolio. Then on the contrary, I actually have my highest dividend payer right now on a monthly basis. It's the only monthly dividend stock I have. It's Realty Income, an amazing REIT, real estate investment trust. They have been a little bit on a downward trend in recent times because, interest environment is so expensive. Mortgages are becoming more and more expensive. All of us are feeling it. If I'm myself in the process of buying an apartment and it's so expensive right now. So you can imagine for those big companies, it's also getting more and more expensive to borrow money to fuel the acquisition and growth plans. So that's becoming more and more expensive, but at the same time, meaning a lower stock price, I can also scoop up more of the shares and therefore in the future increase my earning potential in terms of dividends. And right now, almost 16 euros. So I'm really happy with that. And that's being paid to me every single month. And if I keep investing more, next month already it will be reflected and that amount will be higher. So that's nice to see that. H&M, again, it's one of the stocks I got. I don't really pay attention to it. I'm probably going to sell it eventually. Still paid me 50 cents, which is nice, but not a stock I'll be buying more of. Then we have Morgan Stanley. That's actually a position I hold in my interactive brokers account, and I'm really quite bullish on them. It's sort of an investment company, but of course, at the same time, they're also suffering from this high interest environment because if you want to make deals, you want to have low financing costs. So that makes things more expensive for Morgan Stanley. And that's why I'm really happy to scoop up more of their shares going forward. And they pay me a healthy almost 9 euros. So that's nice to see. And once again, they pay me on a quarterly basis. Next up, we have ASML, which is an amazing company. I really recommend you to do your research into them because this is actually the one company in the world that produces, all this high-tech equipment in order for chip manufacturers to produce the chips. So really an important company. It's actually a Dutch company. And yeah, I mean, I got this share gifted, but actually I quite like the company. I just think they're quite expensive at the moment and the dividend is very little. But as a company itself, what they're doing and the importance and significance of them in the world, I mean, it's unquestionable and really a good company to keep an eye on. And lastly, we have the Blackstone Group. That's a company I actively bought. I hold it in my Interactive Brokers portfolio. And yeah, they're also similar to Morgan Stanley and some others. Most of them actually, those big dividend paying stocks that are relying on a cheap and low interest environment, have been on a little decline in recent times. Going forward, the future looks bright as financing costs and interest rates are coming down, but still they paid me a nice healthy dividend, and I'll definitely continue to invest in them. Looking ahead for December, it looks very rosy, quite a few dividend payers coming up over there, and of course my biggest one on a quarterly basis will be the S&P 500. I buy it through the VUSA ETF in euros on Interactive Brokers, and you can see it's going to be 34 euros. So that's really quite a nice payout, and that's paid to me on a quarterly basis. So I'm quite excited for that. And one amazing milestone I'm super happy to share with you that I've been looking forward for quite a while. When I go into all time, you can see that for next year, I finally hit the 1,000 euros in a year threshold. So that's really cool. 1,000 euros of annual dividends. Now, of course, that's still a small amount when you think about it. When you break it down, it's less than 100 euros a month on average. But for me, psychologically, when you see the growth and where I came from, in 2021, I only had 14 euros. Then I started getting more interest into dividends. It was at 146. This year, it will be around 509 euros. And next year, already more than doubled that. So you can really see the snowball trajectory kicking in. And honestly, if I stick with it for the next 20, 30 years, this is going to be my retirement plan, much better than relying on the government or the country to pay my pension plan, which I don't really trust. So I really rather look after this myself. This is obviously not going to pay for my lifestyle right now, but in 30, 40 years, considering compound annual growth and continuous dollar cost averaging, I'm really confident that number could potentially hit six-figure annual dividend income. So that will be my goal, but the next goal of course would be 5-figure annual dividend income. Right, with this, let's move to the interest income that I got during the month of November. And as I said, right now, some of the companies are being hurt with the high interest environment that we're in. But as retail investors ourselves, we can actually really benefit from it because the high interest environment is really encouraging those people who have cash and want to save their money and keep it in the bank account. I mean, you can have bank accounts, depending on the currency, up to 5.5% without any lockup period on your dollars. Right now, I'm getting 4% on my euros without any lockup period. And that's really nice. That starts adding up the longer it takes. So if you don't borrow too much money, you can really benefit from the high interest that you get on your cash. And I think it's a nice way to diversify, not to be fully invested, but still have your emergency fund on the side, which you can always tap into if it's liquid. That's why I don't like lockup periods. I always want to have my money liquid. So if I need it right away, I can just withdraw it and use it however I need to. And that's really nice. I'm going to show you all the different apps that I'm using that help me to have a liquid portfolio while still benefiting from those high interest rates. So the first out of 3 brokers that I mostly use to keep my cash and money with is Lightyear. As you can see over here, that's my total portfolio. And when I go over here at the bottom right, this is the cash balance that I hold in my portfolio, mostly euros, but I could also keep my dollars and pounds in there. Obviously, you'll get a higher interest rate on dollars and pounds because in those countries, the Fed or the national bank, so to say, does have a higher interest rate than we have in Europe right now with the Euribor, which is slightly lower. So that's usually reflected depending on where you live. You might have a higher or lower interest rate. But as you can see, most of my money as I transact in euro, I live in Europe and I mostly need euros. That's why I have majority in euro because yes, I could technically switch it and transfer it into dollars and then benefit from a higher rate. But keep in mind that you will also be subject to exchange rate fluctuations. In case the dollar drops, maybe it could be by 1-2%, then in the end, I'll be worse off than having at a slightly lower interest rate but have a stable euro rate. So it really depends on your needs. If you don't really need the money and don't need to time it, then it might make sense to switch it up, keep it in dollars and benefit from the additional interest rate. But in my case, it makes more sense to keep it in euros. So if I click into this over here, you can see already lifetime interest so far. I got 350 euros in interest just on my money sitting here, which is really nice. In past times, I would have kept it in my local bank account where I get absolutely zero for it. So just keeping it over here definitely starts paying off. And you can also really clearly see right now, the ECB base rate is 4%. They take a small fee of 0.75%, which is totally fine. And I really like how transparent they are about it. And they pay me out the balance of 3.25% interest. It's protected up to 20K. Last month, 64 euros. So honestly, that's really not too shabby. On a monthly basis, that already takes care of quite a few subscriptions that I have on a monthly basis. So that's really nice. In fact, actually it pays exactly for my gym membership. So that's really cool. And yeah, that's going to pay to me on a monthly basis. And don't forget, that money is automatically put back into my cash account. So next month, I'll get interest on that amount as well. So it starts compounding over time as well. Now, obviously it's a small amount, but a few months down the line, it will really start to add up, and really without any work or additional risk, which is really nice. The next step I use to keep some of my cash is Revolut. Now you can see right here, I have two savings accounts, one for USD and one for euros. So let's start off with the euros, which is a bigger holding. If I click into this, you can see right now I'm getting 3.95%. So even more than I get on my light year, but still fairly similar. It's also a similar protection level. Technically, it's a money market fund we're investing in. So it's a little bit more risky if you wanted to than on light year. But at the same time, it's really marginal risk. It's liquid. I can withdraw it at a moment's notice. So that's good. And you can see I get paid my interest every single day rather than once a month. Every single day, this money is being added into my account and starts accumulating more money in the process. So that's really good. If I go into details, you can see here I started only recently, but so far still made 106 euros in earnings. And if I want to see exactly what I earned last month, I just click onto more here, click statement, go ahead, select the month for November, PDF, yep, click generate, and boom, I will get a PDF report here and I can see total earned interest 54 euros, almost 55 euros. So similar to light year, obviously I have a bit less money despite the higher interest rate, but yeah, really not bad. Those two together already over 100 euros in interest per month, which is really nice. And then from here, I can also go into my US holdings. Very easy, just swipe down, click USD, and that's even higher at 5.42. Now, I do keep some dollars in here because usually what I do, I convert some of my euros into dollars and then send them from Revolut into my interactive brokers account. And in the past, those funds would idly just be sitting around. Now they start collecting money. You can see almost $1 per day that I'm being paid in interest. So whenever I'm running low on interactive brokers fund balance, I will send some of it over there while still retaining some of the funds over here and get that sweet income. And yes, in the end, for the months over here, it turned out to be an additional $30. And why not to benefit from it, right? Better than just keeping it all in my interactive brokers account and get nothing for it. So definitely it's a great tool to capitalize on. Now, I do understand that right now Revolut doesn't offer this savings plans in all the countries, so it depends. Hopefully it's available in the country where you live in. And the saving rate also depends on your Revolut plan. So the higher your plan, the higher the interest rate will be. So that's sometimes another reason to upgrade to potentially benefit from a high interest rate if that is important for you. And lastly, we moved to Trade Republic, which is actually my favorite broker, to get that high interest rate. They are protecting your funds up to 100,000 euros and paying you interest up to 50,000 euros at 4% annually without any lockup period. So right now, honestly, I still think is the best offer out there without any real risk. And that's really good. As you can see over here, for the month of November, I got a whopping 166 euros and 50 cents. So that's so much more than I got with the whole dividend income for the whole month of November and even December if I add it up together. So that's really good. And yeah, really like it. As you can see, it's 4% paid to me on a monthly basis. It will go automatically back into my account. And next month, I will get interest already on a higher amount. So that's really good and keeps me excited to stay invested. And you can see over here, my lifetime interest earned with them is already 636 euros just by keeping my funds over there, which otherwise I would have never gotten if I left it in my local bank account. So really guys, if you're not using any of those, make sure you utilize them and benefit from it, because why not, right? It's technically free money. You just keep it over there. It's fully secured. So there's nothing to worry about. Unlike, some stocks, for example, because, dividend stocks can also go down for 1, 2, 3 years and you might get 2, 3, 4% dividend with the risk attached to it. Here, it's totally risk-free. So why not use it, right? Again, as I'm a long-term investor, I still want to diversify. I want to have some money in cash and some in dividends, because 10, 20, 30 years from now, I'm very confident that the companies I invest in will do better and my dividends will grow. But right now, I will definitely make sure that some of the cash positions I have are being kept in those brokers or bank apps to benefit from the high interest environment. And lastly, let's talk about the cashback that I made in the month of November. For that, we hop back into Revolut, which is my financial app of choice. I use it mostly to transact on a daily basis. I'm currently on the Revolut Ultra plan, and I mostly use it together with my Revolut Pro card, because that way I should get 1.2% cashback on every single transactions without any monthly cap, because a lot of the cashback cards, they have a cap of the amount of the cost of the card. It could be 10 euros, 20 euros, but here, you could have 100, 200, 300 euros cashback if you ended up spending that much. So yeah, I really quite liked it. Right, so you can see for the month of November, which was paid to me in December, that's why it says here, but I got 44 euros and 80 cents in cashback. Now actually the cost for my Ultra card is 45 euros. So technically, just with the cashback, it already paid for itself. Now on top of that, I get obviously countless benefits such as free airport lounge access, insurances, free NordVPN access, Financial Times access. So it really shows if you spend quite a bit, then definitely it starts adding up and makes sense. You can see last month even I got more than I paid for the card. So it really makes sense for me. And you can see the lifetime cashback, 414 euros, which otherwise would have gone to waste basically if I didn't have that. So for me right now, it definitely makes financial sense. Well, there you have it, guys. I hope you enjoyed the video. And if you want to see more of that, maybe also in written format, then why not subscribe to my newsletter that I send out on a weekly basis. And if you do so, as a bonus, I'll also give you my free net worth tracker that you can use to track your net worth over time. Next up, check out this video over here where I'm going to run you through my entire investment portfolio. Thanks a lot for watching. As always, stay healthy, get wealthy, and I'll see you in the next one. Ciao.